हेलो फ्रेंड्स। हाउ आर यू? आई होप आप लोग सब लोग फाइन होंगे। ये एक मैं छोटा सा एक टॉपिक आपके साथ डिस्कस करना चाहता हूँ विच इज़ अ वेरी बर्निंग टॉपिक relating to the financial instrument. I hope you can see my screen. So this is relating to the Ind AS 32, 39, and 109. So it focuses on the financial instruments. So here, like just as a क्या इसमें प्रॉब्लम है, क्यों ये अकाउंटिंग स्टैंडर्ड इतना इम्पोर्टेंट है और इसमें क्या चीज़ होती है, एंड वाई इट इज़ अ वेरी ग्रे एरिया in the market. And still this is the very like it is called as a backbone of the accounting standards. If you are having the concept clear in this accounting standards, so then it will be easy for you to link all the other accounting standards. Correct. So it is just like a bread and butter. So similarly, if you can see here, like means I have divided this topic into the three things. So why it is important, why it is complicated, and this accounting standard what it covers. So mainly, so why it is important. I hope like just I'm reiterating, but those who are doing the chartered accountant course, so they know about this accounting standard and why it is very important. So like here now the balance sheet, normally the balance sheet it consists of the various items. So but here now this 90 to 100% of the your items which are coming in the balance sheet, it is covered by the financial instrument accounting standard. So that's why it's very important. Second thing, what I have told you, like means in the beginning, so this basic, so it covers, so it's just like your foundation, and if your foundation is strong, so then you can correlate, uh, uh, you can easily understand about the all the other accounting standard because this acting as a reference point everywhere, like in every accounting standards. So the students and the people, those are working still, so they are facing the problem in this accounting standard. Then third thing, uh, if you want to come into the banking sector, so this is like your bread and butter. So so like this is like an irony that even in our institute, the CA institute, so hardly they are asking about this accounting standard. I think around 15 to 20% weightage is there, but still I believe it's very less because it's very complicated uh, accounting standard. So that's why. So and those who want to come into the banking sector, so uh, I feel that after completing the your CA course also, then also like it's difficult to enter or difficult to crack the interview. Those who want to pursue the career in the banking sector because they are not having the knowledge about the derivatives, they are not having the knowledge about the hedging, similarly the impairment, so all those things. So like hardly in the CA institute, so they just touch upon. They are not going inside the deep dive. So that is an issue. So that's why. So there is a huge gap even after becoming the CA and what the industry is expecting. So that is a issue which is there in the market. Okay. Now coming to the second point here, why it is complicated. So first thing, the tutors, what they are teaching still, because this accounting standard, it requires to have the practical exposure to understand better about this accounting standard. So the tutors, those who are teaching, so they are not, this is my understanding that the tutors they are not having the exposure of the market. They are not they haven't worked in the banking sector like this. What I've told you, this is the bread and butter for the banking sector. So the tutors, so that knowledge gap is there because they are not having any exposure in the banking sector. So that is an issue. And similarly, the CA institute, so they are also like what I've seen the study material, so means they are not up to date. They are not going deep dive into the concepts where the industry is expecting the the candidate should have the knowledge about the financial instruments. So now it is like a vicious circle. Like if the tutor is not able to teach those concepts, so then the CA institute they cannot ask about the questions, or the other institutes, our Indian institute, they cannot ask the question about uh, that uh, concepts which the industry is demanding. Okay. Then the third thing is the derivative. I think the derivative everybody knows like how like this derivative it's very evolving. Like means it keeps on changing. So like here like the the simple example about the derivative is like the options, the futures. Then if you go inside it, so various different type of instruments are there like the IRS, the interest rate swap, the cross currency swap, then the credit default swap, all those things. So here, like hardly the institute they have touched upon, even the tutors they haven't touched upon what is a derivative, what is the meaning of the derivative as such. S- and similarly, the definition of the financial instruments, so like the financial assets and the financial liabilities. So hardly they are touching upon, like means they are not going inside in detail. So that is an issue. So that's why. So it's a very, you can say the uh, very bitter truth, but yeah, it's a very complicated standard. But once your concept is clear in this accounting standard, this particular financial instrument, then the other accounting standards like your the share-based payment, the consolidation, then the new accounting standard which is coming like your um, on the insurance, then similarly your the lease, and then the revenue recognition accounting standards. So those you can correlate, means you can easily correlate about it. Once you are having the foundation strong, so then it will be easy for you to understand the others accounting standards. So coming to the last point, so the financial instruments. So in the financial instrument, like means this accounting standard, what it covers majorly. So just simply means I've written in a three categories. So here, the first thing is about the financial asset, the telling about you the financial instruments, the its classification is its initial and the subsequent recognition. So in the classification, like you are having the for the financial asset, you are having the fair value through P&L, then the FV OCI, the fair value through OCI, other comprehensive income, then the amortized cost. And similarly, in the financial liability, you are having the fair value through P&L and the amortized cost. So in this, the designated concept is also there, which is very important. Um, so the classification, so in this, like means you are able to classify about the financial instruments. So maybe I'm just thinking to uh, start uploading uh, some videos on this concept in this particular, this dedicated accounting standard on this financial instrument. So that means that those who want to pursue their career in the banking sector, so they can easily understand about it. So it will be acting as a like your launching pad once you complete your CA, and then if you want to enter into your the banking sector, so then it will be acting like you're bridging the gap between this one. Okay, so this is the first thing. Then the impairment. So impairment of the financial instrument. So here this I'm talking about the impairment of the financial instrument. So here like here the concept of the ECL is there, the expected credit loss. So why this concept has come, how this is computed. So like here this is a, probability of default into exposure at default into your loss given default. So that is a formula. So so here so on the basis of this, you uh, you are creating the provision about it. So this is also a very um, what you say the whole ocean about it. So in the impairment, so here in the banking sector also you are having a very separate division about this impairment of the financial instrument. So and then you are having the staging of it, the stage one, stage two, stage three. So this is in the IFRS, in the IFRS world. So how this the probability of default is calculated. So that is a different thing. So means uh, so it is like your the risk management world and plus the accounting management world. So that is uh, if you want if you want the holistic picture about it, so then you should also have the understanding about the risk. So in the risk, like means the different type of the risk are there, the market risk, then the credit risk, and then the operational risk. So this impairment of the financial instrument, it is focusing on the credit risk here. So that is also very important. Like means if you want to pursue your career in the impairment side, in the impairment of financial instruments, so that is also a very lucrative profile here in this impairment. Then the third thing is the hedging. So I think the hedging is the most gray area, which is the unexplored area. How the hedging is happening. So mainly this hedging, it's normally it's done in the banking sector and plus even in the oil industry. So like here, like in the oil, like the petrol. So now the crude price is going high. So how to hedge those things, and even in the aviation sector also. But yeah, so but majorly this hedging it is done in the banking sector. So here this hedging is like your three types of hedgings are there: the fair value hedge, the cash flow hedge, and then the net investment hedging. So why this three different type of hedgings are there? Then how its accounting is happening. So here like uh, what type of financial instruments you can use for the hedging, and what type of the financial items on which you can do the hedging. So these are the very important thing, like means if you want to pursue. So here like different uh, departments are there even in the hedging also, like for the interest rate hedging, like the IRBB is an interest rate banking book. So in that how the hedging is happening. Then similarly for the FX, the FX, the how the hedging is happening in the FX world also. So here like you're having a transactional FX, then the structural FX, and then the hedging of it. Similarly, in the net investment hedging, so so normally it is done for like the subsidiary. If the subsidiary is having a different currency, the reporting currency, and your holding company is having a different currency, so then in that the FX risk, that is so how the hedging is done for that thing. So it is also covered under the net investment hedging. So it's a very uh, gray area, unexplored area. Still, it is uh, like evolving. So you need to understand. But yeah, if you see, if you can correlate with your course of the CA course, so hardly they're touching on all these concepts. So, and if you're going for the interview for the banking sector, so then they are expecting these three things, like means what is a financial instrument, then the financial asset, then similarly like in the financial instrument, like in the financial liability, you are having a compound financial instrument. So in the compound financial instrument also you are having a different type of financial instrument. Like, but what I have seen, the the tutors what they are teaching, just they are uh, touching the concept. Like means just like in the just I'm giving a simple example in the CFI, the compound financial instrument. So like okay, just a minute. Yep. So in the compound financial instrument, like the tutors, they are just simply talking about um, the debt plus the conversion option. Conversion option means you're converting the your debt into the equity. So, but here the CFI it is having the other type of the instrument also. So debt plus your, so that means I'm talking about the plain vanilla debts, and here also the plain vanilla debt plus your embedded derivatives. This I'm writing the short form, the embedded derivative, and then plus this conversion option here. So nobody has talked about the embedded derivative, what it is. So here it is a put option, and then the uh, you have the call option, all those things. And similarly, uh, in the financial liability, you are having the different type of the instruments like the CFI, which I mentioned you. Similarly, the derivatives over uh, own equity. So this is also a very new concept. Um but what I've seen that hardly the tutors they are talking about all these things because they are not having the exposure about all these things. So yeah. So if you uh, want to pursue the career in banking sector specifically, like the multinational banks or the Indian banks, so then you should have the control. Means you should know about this financial instrument accounting standard in and out, so that you can appreciate, and maybe then your career it will be on the fast track. Uh, so I'm just thinking like to, because I'm having an experience of around 18 years in the banking sector now. So I'm a vice president in one of the multinational bank. Maybe you can check on my LinkedIn, my uh, profile. So I'm just thinking to start the course also, but yeah, but in the beginning I'm just trying to see the um, uh, the your response about this thing. Maybe you can uh, provide your comments where you are facing any issue, so that means I can pick that issue. Um, so it is in the like in the stage. I'm just thinking like how to uh, share my knowledge on this accounting standard, because this is like your bread and butter. Uh, So that's it from my side. Thank you. Thanks everyone. Yep. And please subscribe if you like this channel, and if you are finding it informative, and just try to circulate it as much as, so that the students or the those who are struggling in this particular accounting standard, so that they can understand about it and it will be helpful to them also. Thank you. Thanks a lot.